The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman, 29th of January. Wow, January's almost gone. And my pleasure to be here Monday, Tuesday, Wednesday, Thursday, Friday, 11 o'clock till noon. And actually today I'll even be here 2 o'clock to 3 to sit in for Dave White. And so let's go through the numbers as we're looking right now. The Dow's up 36. What a resilient market. What an amazing market. Up 36 at 13,918, having made a new recovery high in leg C. We'll talk about that in a moment. S&P has not yet made the recovery high. It's at 1502.07, up 1.89. Comp index is doing not too well. It's down 9 at 31.44, even though Apple is up $7 at 457, having made a round number low the other day. Interesting, huh? Wow, those round numbers are important to look for. Gold is up 9 at 1661. Silver's up 42 cents at 31.20. Platinum's up 11, but high-grade copper is up $1.80 at 367. In that trading range, important to be able to hold the trading range. I would like to see it get to the somewhere around the 4 area in the next 3 to 4 weeks. And bonds are up 1/32 and 143 and 22 30-seconds. So let's do this. I had a couple of, we can have a request day, we can have a whole bunch of things at 877-927-6648. I'm trying to be as patient as I can, even though we have set in place a little insurance, given ourselves a little insurance. Let me explain why. In the Dow chart, this is an extended leg C. In other words, since peak B was confirmed on the 16th of January with a lower high bar at 13,534.89, we've had 1, 2, 3, 4, 5, 6, 7, and this is the 8th consecutive higher high. All it does is I call this a floating ladder. From the moment it broke out 1 penny above peak B, it becomes leg C. And all of these higher highs extend to the right, leg C, until, and you can see the little curve over here, you can see the doji from yesterday, until there is a lower high bar, and that should make peak C. I believe we are very close in both points now and time to making a short-term sell signal in the daily. Yeah, I'm not even sure it's going to get to a sell mode because the MACD is still so strong and the stochastics at 97%. But this is what I'm looking at. Here's the pattern that I show my subscribers to my opening call every single day. I show the Dow chart as simple as I can. I've started showing the MACD and stochastic because instead of doing it over and over and over in different charts and time frames, we've got the one chart. It's good enough. You have the 9-period exponential moving average at 13,767. I've drawn in an oval. I've put in leg. This is in the ChapmanWave stalk leg formation. A long leg up. It could be made up of a series of peaks, but basically this is one swoop to the upside from the 12,883 December 31st low. And it should make some kind of a top, and then it should go into a choppy trading band. I wouldn't be surprised even if I can narrow the oval for now. Just for now. I don't know. This is just all guesswork. We haven't even gotten there yet. I suspect we will make a peak C. Probably, I thought it might be today, and in fact, there's very little move to the upside so far, but it hasn't made a new recovery at 13,922.73, just above the 13,915 level of yesterday. Doesn't matter, it extends the leg C. I suspect we're going to make a peak C any day now, and then there's going to be a sudden pop to the upside for leg D, and then an equally sudden, even the bar that makes D. It's possible that we close at the low and we go down for making next week more a down week than an up week. In other words, make some kind of high in the next 3 days or 4 days, and then we start to see lower lows in the daily chart going into next week. Because we have, in my opening call, we've had 6 positions, long positions, no shorts right now, and they've been doing fabulously. I said that we probably have seen, it would have been great just to be able to exit at yesterday's close with 20% more and 25% the increases in some stocks, 10, 12 in others. But, you know, it just doesn't work that way. I like these stocks. Well, all but one. I'm very suspicious of one. But I like the majority of them because their weekly charts are looking so good that I did this in the home builders and the materials and the roofers way back in early 2011. We got in very nicely, and I took very nice profits, and then I just didn't get back in. Well, I got back in and I put the stops a little too tight, and then it was tough to get back in afterwards. I don't really want to do it with these guys. I like them as they stand right now. I like what's going on. How I handle it's going to be the most important issue. So we're taking some insurance a little prematurely. I knew it was premature. I said it was premature. But that's because I don't expect that the Dow is going to go that much higher from here before we get. In other words, more likely there's a 60 to an 80 point move to the upside with a 200-point move to the downside, then a 200-point move to the upside and a 100-point move to the downside. Just right now, it's not a big deal. It's a breather, very important breather. Can it become a more serious decline? Absolutely. You can't say no to anything like that. We're getting sector rotation. The cloud stocks just got smacked because of VMware's terrible earnings report last night. On the other hand, you've had some superior moves to the upside, like ISRG, Intuitive Surgical, and some others. So we're looking at a very selective market here. I want to keep it that way. I'd like to keep our longs as long as we can. I've got stops in, and that's the sacrifice we're going to have to make. So let me do this. In looking at the Dow itself, the chart is what I show my subscribers. Let's just quickly go for a quick internal look at the 5 sectors that I show every single day in my overview and market today section. And you'll see that the volatility index needed to go above 13.91 for leg D in the 120 minutes. It went to 13.88. It missed it by 4 cents. It missed making a new recovery high. I suspect it is going to get to that leg D, and there's a chance it's going to get to the upper boundary very short term. That's 14.53. But obviously that section of 15.93 to 17.88, that gap down from back on the 2nd of January or whatever, that is going to be the most important thing that I'm looking at in the VIX. And in the 120-minute chart, I'm probably going to have to call this a peak F. And there's a good chance we pull back. If I'm wrong and the Dow climbs to 13,970s, touches 14,000 in the next 2 days or so, besides being excellent action, of course it will suit me because our 6 stocks that we are long should participate in the upside. You never know, but they should. More likely is that we're going to suddenly see a spike in the TRIN, the short-term trading index, the VIX index, and that'll give us a clue as to what's happening. Even the euro and euro-dollar currency pair need to make leg D. And let me just quickly go there, then we're going to go to the lines EUR-USD, and it's made leg D today. So nothing wrong with the technicals, 94% stochastic. MACD's good. Leg D in the weekly, getting right to the resistance point that I targeted a while back, and monthly in leg B, gray B because it's a retracement mode. So it's also ready to take a little bit of a breather, 1.347 right now in the euro-US dollar forex currency pair. 1.33 is a very strong support. I suspect it's going to go to 1.334, maybe a tad lower. We'll see. And the USD, and then we're going to go to our first caller, USD. Yeah, USD has made a peak D yesterday. If there's no new high bar today, there again, the stochastic and MACD are saying, okay, a little bit of a timeout. MACD is actually a little bit weak. And the stochastic's at 89%. So yes, 89 is at 90.68. That can go to 89.95. I would not be surprised to see a test of the 89.40s over the next couple of days. Let's go to our first caller. We've got, Peter in Park City. Hi, Peter. How are you?
very good, Basil. How are you?
I'm very well. What a coincidence. Just straight, I didn't even see that. Good.
No, that's great. Well, first off, I wanted to thank you so much for your more than generous Christmas offer with your the CD. All the years that I've followed you, I've never gotten it, and it just was just a perfect excuse to, just add it as a kind of a reference source. So I just wanted to say thanks for that.
Well, I appreciate that. In fact, just happened to have right here, looking at Tiger TV, introducing the ChapmanWave methodology by Basil Chapman, chart analysis in the stock market. And it has all these different chapters, the buy signal, the buy mode, more advanced techniques, renaming, restart, etc., etc. So thank you very much for, first of all, purchasing it. And secondly, I believe that the information in that CD, the more I go through it, the more I say, wow, I really put a lot of effort into that. I'm still proud of it many years later. So thank you, Peter. I appreciate that.
Not a problem.
You would like to look at, and of course, anyone who has questions, who has my CD, just fire away. I get these questions all the time. As people, actually, I've had a whole bunch of follow-up emails from folks who are doing the ChapmanWave, started to do really nicely with it. And what I always say is, keep in mind that it is just another tool, and that if you can put it together with your own thinking, with your own methodology, and make it part of your literature, part of your library, and not part of my library, that's going to be an even better medium and usage of the techniques. So, you'd like to look at?
Let's look at the euro. I know we finally started leg B today. If I look on shorter-term time frames, whether it be 60 or 120, it seems like the MACD is significantly weaker, which makes me pause to think that, maybe we do get, and also so much discussion of the weekly, reverse head and shoulders, et cetera, that you're hearing constantly, that, we could actually see, a top end today potentially. And in addition, when you look at the currency pairs, starting, say, with the euro yen, the euro Aussie, the euro pound, none of them have made new highs. So it's starting to wonder if that rotation back out of the euro and basically bounces in other currencies are about to occur. So that was basically my question.
Yeah, that's a very good question. Let me explain why I think it's a good question. Because a trend in motion tends to stay in motion until it hits some kind of resistance, and that resistance can be either friction, because it's going up in such a struggled and unenergetic way that you can think of it as just something that will stop at any point because it's just scraping along the ground. Or it stops because on the left side there was a specific resistance area, or there's something like the 200-period exponential moving average. But if you put it together with other resources, just as you've done, you can get a much better a feel for the potential downside and upside. Let's do that. We'll be back with Peter in Park City straight after this break, and Mike in New York. And hold on, we'll be back. Dow's up 33, S&P's up 2.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi folks, we're back with Peter from Park City, Utah, and we are looking at the euro dollar, the EUR USD, and the observation that was made is that there's a potential, looking at the trough back in December of January of 2012 in the weekly chart with a rally to 1.348, the 200 just below the 200 period moving average, back down to the low of 1.20417. Now that was in fact a perfect left side right side price time match in the way that I calculate these measured moves, number of days to the left or weeks to the left and to the right, but it's also the same thing on the upside, because there was one that goes to the week of the 15th of February, and that would go to the high around about 1.354. That was back in December of 2011. What's happened is that there's been a rally right up and then through this yellow line, the 200 period exponential moving average. Let me just make this a little clearer here. The 200 period exponential moving average I'd already circled as a target. Now this is leg D. My suspicion, based on the 90% in the stochastic and the MACD still expanding, is that there could be a pullback to about the 1.325 area. If it breaks and closes under that, then the MACD will start to become a little weaker, and there's a cup and a ladle and breakout pattern, but everything so far has been underneath that 1.34855 high of the week of the 24th of February back in 2012. So what I'm looking at this particular point is that there should be some kind of resistance. The monthly chart is the one that's intriguing to me because there's a downtrend line, and that downtrend line has resistance all the way up at a 1.41 area. And in a funny kind of way, it matches the GLD chart in that it's made this cup formation that went to an M formation. But in this instance, it broke down to lower lows, made slightly lower lows with a left side, right side price time match, which says that this rally, having taken out the left side peak in the monthly of February of 2012 of 1.34855, says that it could in fact continue to rally some, even if there's a bit of weakness. And that, you see, that all coincides with what I'm looking at when I'm looking at the another currency pair that has gone skyrocketing to the upside, and that's in a cup and ladle pattern in the weekly. That's the USD JPY, which spiraled through the left side high of 84.173 when it started leg D extension in the week of the 21st of December of 2012. So, and it's right now, has it made a new recovery high, 91,188? Yes, so this is leg D. I wouldn't be surprised if next week is a consolidation week and you see the USD JPY pull back. Now, here, this is, Peter, I know that you know that I like to look at the whole smorgasbord of the pins that we're looking at. And in this particular case, the T-bonds, the TLT, has gone to a lower leg D in the weekly. The monthly looks very poor. It's leg B down. But most importantly is that the daily is saying, almost ready for a bit of a bounce from 117.43 somewhere to the 190, maybe even the 120 area, if it's able to break above 118.77 in the next 2 to 3 sessions without crumbling and breaking 116, which is key support. So, let me sum it up. Euro still has strength, but like the market itself, it's getting to this area where just a bit of a breather at least should be coming in. That's number one. Number two is the bonds are saying I don't like that monthly or the weekly charts at all, but they are ready at least for a bit of a counter trend rally, and that would coincide if in fact the dollar, which is actually, I'm sure you've been looking at the dollar and it's been acting just terribly, is trying to make the arch formation. The weekly has failed, so I'm going to take this away right now. The weekly is trying to find some support. If the dollar by Friday afternoon to Monday afternoon is able to climb above 80.09, this is the index itself, then all of a sudden the 80.24 resistance of the 200 period moving average will come a magnet, and it could have a counter trend. I call it a counter trend rally at this particular point. So here's the way I'm looking at it. I don't know if you have a position in the euro dollar right now, but I would probably say at this particular point, I would start putting in a stop to the upside, because if it breaks 1.337, it's going to pull back a little bit more. There is just enough strength to go a little higher over the next day or two, but I think we're very close to some kind of a digestive period. So I hope that answers your question.
Yeah, it does. I do have one quick one after the fact, if I could.
Okay, I'll hold on through the break, and we'll come back with you and Mike straight after the break. Hold on. You see the Dow's now up 60, S&P's up 5.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. Tiger conditions are. Dow's up 58. S&P's up 5. What a relentless market this is. Just an outstanding action going on right at this particular moment. Just real quickly, we're on with Peter, but I promised in the den that I would look at a couple of stuff. Someone had mentioned STX because I'd shown it yesterday, and for my subscribers, this is a study piece showing the resistance. I didn't realize that there would be an earnings report. I think there was an earnings report. Seagate Technology, computers, peripherals, is down 337 at 3402, and what I'd shown was the strong resistance in the trend line in the monthly chart, and it had gone into the ChapmanWave inside track, and the monthly, the weekly is an F/A with 32.67 support, and what I say is, Richard, SDX is likely to now test the 32 breakout level. That's that cup and that's the ChapmanWave cup and ladle breakout, and that's the 32 area. 32.25 is actually the area that I wouldn't be surprised if it tests. But the MACD in the weekly and the stochastic in the weekly are still very strong. So I'm considering just at the moment that this is a serious pullback, and we'll have to see how the 32 to 31.5 area holds. Let's go back to Peter. So Peter, you had another question.
Well, yeah, it's a real quick one on the 60-minute euro.
Yes.
The MACD is so dramatically weak versus the previous high back, I guess, on the 25th. What do you make of it when it's that weak?
Well,
it's barely turning up, and it's putting in new highs. Yet it's like a downhill ski slope practically on the MACD.
This is on the 100. I've got the 120, but the 60 will have the same thing, maybe even accelerated a little bit more.
What I'm
looking at here is that that technique that I call the single leg A phenomenon, where there's a sudden up spike and it starts to fade and it comes all the way back and then it takes out the low, or it stops real close so it looks like the Eiffel Tower. Well, there's a chance that we're seeing that right now. I'm anticipating that the leg D up in the Dow, when it comes, after peak C is made, and it can't be made until tomorrow, which means we cannot get leg D until the very earliest Thursday, is going to be a single leg up just like this, and then it's going to fail. So the Euro USD could, in fact, in the 120-minute chart or the 60, be saying, hey, be careful. Because if there is no new high by tomorrow above 1.34955, then this is going to be a single leg A up failure instead of leg E. If it's A and it starts to hold, and by the end of the day, it's taken out the high of today, 1.34955, that stochastic and MACD will improve, and in fact, it will match what we're seeing in the dollar and the S&P, that there could be a pullback and then one more sudden spike to the upside, and everyone gives up and says, oh my God, we are just going higher, 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 and all of a sudden we get a 3% or so pullback. That's what I'm expecting. So I hope that answers your question.
It did. Thanks so much, Basil.
Thanks, and call again, Peter. Good to hear from you. Peter in Park City. Let's go to Mike in New York. Hi, Mike, how are you?
Good. Two questions. One, Basil, have you ever done a study on the average percentage pullbacks from leg F, like a monthly leg F? Two,
I've never done a study of the percentage points on leg F for two reasons. One is I have found that when you lock your mind on a percentage, that is the norm. In other words, 60% of the time, this is what you expect. It starts to cloud your thinking, because at peak F, if I see that the technicals are failing, the MACD and stochastic are failing and did not confirm the rally, that says there's a real good chance, I'm talking bar types now, that the leg that makes F will close towards its low. The second bar that actually confirms peak F is a very ugly bar that closes at its low. And the next bar could be, in fact, a doji candle or a little bit of a bounce. But if by the fourth candle it's making lower lows and lower highs, there's a real good chance that you're going to get your biggest percentage and time price move to the downside. I found that when I got away from, I used to think that way. In fact, I had a whole study that I was working on to say, if I've got a buy signal, what would be the percentage gain on each successive peak? And then I said, this is like human beings. Everybody might be driving to Boston from Framingham or whatever it is on 120 on the Mass Turnpike. But they could turn off from Newton, they could turn off at Brighton, or they can go all the way, or they can continue all the way down onto the Southeast Expressway or go north. So I just want to know I'm on the path that's going to give you the freeway, the most direct contact with the biggest price range possible, and it will also extend in time. That I found was a much better way to think of it, because when I can show you, I'm looking at a chart. I think you wanted to look at a particular stock now.
Salesforce. I'm having trouble on the monthly counts there.
Okay, I've made it real simple. I've got leg D. Now let me explain why, and this is the reason. Look at this peak F that occurred. Right. Yeah. Okay. This is very unconventional. I don't blame you for having some. This is almost an experiment in the ChapmanWave. It's something I've only just begun doing over the last 6 to 8 months. It's called the unconventional flat base restart. And what it does is it says that the low after your peak D, and you get your peak D, the last one of significance was September of 2010. Folks, we're looking at CRM, which is Salesforce.com. It's down 3.29, not too too bad considering the other VMware is down huge and some of the other cloud computing stocks are down. But most importantly, what I've got is that peak D in September of 2010 at 123.77 pull back to 117 high in October the next month, and then pull back to 97.92. I circled that a long time ago, and I said, there's a chance this is going to be one of those freaky things that I've been looking at for some time. I've been trying to explain it, and the only way I can do that is to go back to my core analogy in the ChapmanWave of 4 higher peaks, and that the instant restart at peak D can have variations to it. And this, in a sense, I won't know for a while, but I'm calling this, at least for the moment, leg D. But in fact, it could be a brand new leg B with a start at the low of December of 2011 at 94.09. But in the meantime, that D that we looked at pulled back and then went on to an E/A at 151.26 in December of 2010. Pulled back, held the 9-period moving average, went to F at 160.12 in July of 2011, and then it had exactly what you would expect at a peak F, the strongest, longest, and deepest consolidation, at least a pullback, and a pullback all the way to 94.09. Now, it goes to a higher high at 164.75, slightly higher in April of 2012, pulls back, and then it has another higher high starting last month and this month, and goes to 178.91. And so far the candle says, hey, there's nothing wrong with the candle so far. So that circle that I've got there says that you don't go to the trough after D. You go to the trough before D, which goes all the way back to September or July of 2010, which is 83.61, and you draw a line underneath it, and that's the line that must not be pierced, and that's this one right here, right there. And if that's the case, what we can expect is that from D, which it could be right now, you can expect maybe higher highs, but when this is completed, it's going to come all the way back to the 80s. Yeah. So that's my outlook looking ahead. Meanwhile, back at the ranch, I'm not prepared to trade on that because it's part of an ongoing study. I have to treat it as if it's maybe brand new leg B. I'm looking at the weekly chart, and it's in leg E. The MACD is good. The stochastics at 91%. It's the daily chart that says, be careful with the alternate wave. This is probably a peak F top that we've just seen. I can even put a down arrow here to show that the stochastic is, it's not under 80%, so I have to put a plus sign. That the stochastic was under 80%, now it's at 80.23, but the MACD is kind of stalling right here. So this is the moment where CRM is most vulnerable. If in fact it takes out the old high of yesterday of 178.91, I just have to say that is outstanding action. If it fails and it breaks 170 support, it's at 174.60 right now, I'll be saying, uh-oh, this is coming down. The 168.30 is the 9-period moving average that it'll have to test. If I have to do an absolute objective study of it right this very second, I have to say, moment of caution. I don't have any signals yet to say that it's going to move 15 points either way right at this particular moment. I might have at the end of the day, I might have tomorrow, but right at this moment, it's in an uptrend. It hasn't changed that trend, but I can't yet say where the next 15 points will be. If I had to guess, my guess is it doesn't have much more than 180 on the upside, and it does have 168 to 165 on the downside over the next 2 weeks. But that's just a guess, and I wouldn't trade on a guess. But I hope that in some way I understand. Did you have a peak F, and this would be leg B?
Yeah.
Yeah, okay. I should have put that in. I don't know why I didn't. I was so busy with that study that I forgot to be. There's just no question. I have to consider right now that it is either A, B, C, D. I'm going to put B/E just in case that other thing comes in, but it doesn't do anything until the month is finished. That'll be Thursday afternoon, and then we'll see if it makes a new high in February. That'll be very positive. If it doesn't make a new high in February, it'll say, okay, be somewhat cautious. But holding up as well as it is right now, I have to say, woohoo, not bad. Only down 1.92%, but VMware is down, what was it, down 20 or something? Let me just see, VMware. Down 20%, down 20 points and 20% at 78.10. I have to say that CRM is still probably the leader of the group. It's acting pretty darn well. VMware is not. So I hope that answers your question.
Yeah, great. Thank you very much.
Good. Thank you. Thank you so much for calling. Let's go to Freeman in Dallas. Hi, Freeman. How are you?
Hey, Basil. How you doing today, sir?
Very well. Thank you.
Hey, Basil, I'm looking at Toll Brothers. I think you know what I'm doing. Was that I put a short on yesterday's high, a penny by yesterday's high. I think I put it 38.23 and it got filled. Was that leg D there?
That is leg F.
That's leg F. Okay.
Let me explain why. In the ChapmanWave methodology, if the MACD continues higher without any little downturns, and you continue from D to an E, and then to an F, this can go to an F, but it can also go to a G. But it's probably not an instant. It isn't an instant restart at this point because it took. Let me just double check. 34.84, 34. Ah, it did. That could have been an instant restart. It doesn't matter. The pattern that I look for is a pattern that says if the MACD fast-moving average consistently holds very high without dipping after every other dip. Rather think of this as only going to an F or a G. I think that on a very short-term basis, you could be correct, but it is one of the very best of the home builders. Toll Brothers, home construction at 38.11 right now. So you got a fabulous entry because it's at 38.11 and it's only gone modestly higher. The 120-minute chart says, I haven't done it. So A, B, C, that's D. Could be F, could be a cup formation. All right, let me do this. If you don't mind being wrong for just a short while if you feel that the downside potential is greater than your risk. Correct, right?
Yes, you're correct.
So I'm going to say to you at 38.22, my target here is to see Toll Brothers at 36.85, and that should happen by Friday or Monday. So, okay. And that's not a big deal. It's only it's less than 2 points, point 1.30. So what I'm looking at here is in the next 2 days, you want to see this close towards the 37.50 area. Now, where would I put a stop? 38.22. I would. For part of your position, I would have 38.77, somewhere around there. But if you want to tighten up a little bit more of your position, maybe 38.47 to 38.51. But I think that you've got yourself, at least on the very short term, the potential for some kind of a top coming in. Many of the home builders right here, and I have to consider it's just a short-term top. If you are correct, if 36.84 goes without taking out, let's just say 38.55, 38.60, but instead it turns down, and by Thursday morning, it's already underneath 37.16, today's low. 37.33. I think 36.84 is in the cards, and then 36.17 would be where I'd see some kind of support or a bounce. But that would be my initial target on the downside. Hope that helps you.
It is, Basil. Thank you very much.
Thank you very much. Freeman in Dallas. We've got Mark in Denver coming up, and we've got we've got a great Panther winner. We'll come back and we'll see who the winner is. Basil Chapman, Tiger Technicians Hour. Dow's at 57, S&P's at 5. We'll be right back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi folks, Basil Chapman, Tiger Technicians Hour. Just real quickly before we go to a mark in Denver, I just wanted to say that I got this information. It's hot off the press. Barb of Stanwood, Washington, you are today's Great Panther Silver winner. And congratulations. It's fantastic. Yes! Bravo, bravo. And B-A-R-B, Barb. I didn't want to sound like Bob. It's Barb in Washington and from Stanwood in Washington. So congratulations, and thank you so much for participating, folks. Go to the front page. You too can be a winner of the Gold Panther Tiger Silver giveaway. And wonderful. Let's go to Mark in Denver. Hi, Mark. How are you?
Good, Basil. How are you?
Very well, thank you. You'd like to look at?
XLE.
Okay, folks, this is the XLE, is the S&P Select Energy Spider Fund. It's trading at 77.61 right now. Leg C up in the ChapmanWave. Broken out on in the cup formation in the weekly chart. I could have done a little something fuzzy here. by giving it a phantom peak in the weekly chart with the high of 66.43 and then 66.50 the weeks of the 22nd of June of last year and 29th. I decided I wanted to keep it as clean as possible, went to peak C and then overlapping leg D. And overlapping leg D is very powerful, usually goes nicely above the former left side high, which is in this case 77.35, so it's at 77.63, and then no matter how much higher it goes, it invariably will come back and test inside the high of 77.35, the breakout level. So do you have a position in this?
Yeah, well, based on the sound of what you're saying, I probably shouldn't have, but I took a small short this morning when it hit 77.45, thinking that we were going to have a light volume test of that last left side peak. And then I was looking at monthly looked like we were potentially in a D.
A leg C, actually. You can't count the first bar. The bar that makes the low cannot be the high. In other words, let me do this so Tiger folks can see. If you're looking at Tiger TV, the bar of October of 2011 at 54.26 also made a high, but in the ChapmanWave methodology, only an instant restart after a peak D can have that formation. I've actually found another time that it can work, but I'm not going to discuss it now. Almost every time you have to, you see, because that bar, you don't know whether you've made a low until you get to the next bar. So only from the next bar can you start the count. So this is leg C, but it has broken a declining trend line. So that's very positive in the monthly so far. Monthly's not finished; it could close back under it. But this is what I'm looking at. If I'm in leg C in the daily and leg C in the 120-minute chart, you might be correct, because all that might happen. This is the same as the Dow. We might be looking at leg C. Then I'm expecting a peak D very, very quickly, in the next couple of days, and then just a momentary spike to D. Now, I could be wrong about the momentary spike to D. That D in the Dow and the XLE, in fact, could turn out to be a real whopper in this particular environment. My anticipation, based on everything I'm looking at, the on-balance volume, all these other things, says as soon as peak C is made, let's just imagine that it's tomorrow and that we've seen the high of the day. It means that on Thursday there could be a pop-up, and that pop-up might only go to 77.83. Well, if you're just short at 77.44, 40-50 cents shouldn't really make that much of a difference. But what you have to see is that after peak D, it must close at the low of the leg that makes D and gap down the next day. That would be going into Friday or Monday. And if that's the case, then 76.08 is the 9-period moving average support. I don't have a signal yet, but I have a number of little mini signals that say we are getting there. So I'm just going to advise you, try to keep your stop tight, because you can have another chance to get to it when it goes into leg D. So either you could just get out now for a very tiny loss and then re-enter the trade, or you can treat it as a small position and you might add. We can talk about it again tomorrow if you want.
Okay, thank you.
Thanks so much for calling. Folks, Basil Chapman, Tiger Technicians out. I will be back for Dave White's show at 2 o'clock.